All right, good afternoon, everyone, and thank you for joining us for our webinar on making dollars and cents of direct pay. I'm Ali Shepard, and I'm a clean energy and climate planner at MAPC. And just to note, we are recording this webinar and it will be available on our website soon. It's so great to see so many folks interested in learning more about the direct pay provisions of the Inflation Reduction Act. And as many of you know, over the past nearly 2 years, the IRA has been instrumental in helping us tackle the climate crisis here and across the country. And there's been a lot of attention on opportunities for competitive grants and direct federal spending, but there's also really exciting and perhaps less well-known provisions like direct pay, which we'll talk about today. And just to note, elective pay is the official name or term for this provision, but we commonly refer to it as direct pay. And so direct pay or elective pay can unlock new ways for municipalities and nonprofits to invest in their clean energy and climate goals by receiving the value of tax credits as direct payments. Direct pay is available for many types of tax credits, including solar and storage, electric vehicle, EV charging, procurement, and more. And so today we're so excited to have three great direct pay experts with us to share their immense knowledge. And so they'll further introduce the program and we'll share information and resources about the application process and how they can help you apply. And so we'll hear from all three panelists first, and then we'll have time at the end for them to answer your questions. So please feel free to add your questions to the chat throughout their presentations. So with that, I would like to first introduce our first presenter, Bob LaRocca. Bob is the Deputy Director for Federal Funds and Infrastructure for Massachusetts. And in this role, he works to support and implement the Healey-Driscoll administration's whole-of-government approach to pursuing federal funds. He oversees the FFIO office, which was formed by executive order to identify federal program opportunities, communicate those opportunities to state agencies and municipalities, and execute an advocacy strategy to bring dollars home to the state. In his free time, he enjoys cooking, reading, and watching the Celtics with his 8-year-old daughter. So Bob, I'll hand it over to you.
And what a day for that for that purpose is my pastime. Thank you, everybody. Thank you, Ali. Thank you to MAPC and to my fellow panelists. I am Bob LaRocca. I'm the state's Deputy Director for Federal Funds and Infrastructure, and I'm really excited to talk about this unique and potentially transformative opportunity called direct pay. I would be remiss if I did not say that we do this work in an inter-office, inter-department, inter-agency way. So I am talking on behalf of FFIO, but the state has been coordinating a lot of our work and planning around direct pay in collaboration with the governor's climate office and Jonathan Schrag in particular, but also other folks across state government, including other people in the Executive Office of Administration and Finance, Energy and Environmental Affairs, and others. And just a quick note on FFIO, what our job is, as Ali said, we go, very simply put, we go out and in this, great context we have where there's a lot of federal dollars available and we have a governor that wants to go out and get them. We try to coordinate that. We advocate on behalf of these opportunities and we bring the dollars home the best that we can. I will give an overview here of direct pay. I'll say what it is. I'll talk about some of the credits. I'll talk about the credit amounts and get into a little bit of the bonuses, which present some great opportunities. I will show you how we have constructed a timeline for this for the 2023 eligible projects. I'll also talk a little bit about how we advise folks to think about this going forward. And then our office has put together a bunch of resources. We have a website that we're constantly updating, and I will share that with you too. So next page, please. I gotta say this, I am a recovering lawyer, but I'm a real lawyer on this call. I'm not giving any legal advice or tax advice. This is really a high-level overview, and we're giving you information only. We do strongly advise that for specific questions in trying to execute direct pay, you do work with bond counsel or an accountant. Thank you. Next slide. So this is, I swear, this is the slide that has the most text on it. Ali did a really nice job of summarizing what direct pay is. I just want to highlight a couple of points here. One, I think people have some understanding about how the Inflation Reduction Act is a really tremendous investment in clean energy. I think what is less well known is that the law is largely a tax bill, and a lot of the dollars are delivered through those incentives. And that is really the vehicle that we're talking about today, direct pay. This gives cities, towns, the Commonwealth, other tax-exempt entities the ability to file a tax return and receive a cash refund for qualifying investments and qualifying projects. This counts for projects that are put into service starting on January 1st, 2023, and it goes all the way till the end of 2032. We like to say that that creates a decade of tax opportunity. And then I put in bold here at the very bottom, our office works a lot in the competitive grant space, right? An agency comes down with a notice of funding opportunity. We try to make people aware of the application deadline, so on and so forth. If any of you, and I'm sure many of you have applied for a federal competitive grant, you know how hard it is. It's a lot of work. It takes a ton of capacity. And even if you put forth a great proposal, there's still a good chance you don't get it, right? That is not what direct pay is. It is literally you do the thing that qualifies for the thing and you get the money back. So our overall potential here of these tax credits is limited to how much we just choose to invest or are able to invest. And I think that's what makes it really special. Next slide, please. So what are we doing as a state to try to maximize this? The first one, we are trying to execute on filing for the projects owned by the Commonwealth for 2023. The second thing is what we're doing here today, trying our best to give actionable guidance and good information and resources to you all. Things 3 and 4 are really kind of looking forward. I mean, one, we do want to begin to build a strategy for how we maximize the impact of these credits, not just for the state, but for municipalities and tax-exempt organizations too. And then lastly, we talk a lot to cities and towns, and we understand some of the challenges here, even with this great opportunity. And one of the things we hear is trying to get startup capital to even do the projects to begin with. And that is something that we are working hard on, trying to figure out some innovative bridge financing. It's related to some pending legislation, but that is something that we are trying really hard to do as a way to sort of spur more direct pay investments. There are 12 credits technically available, but we like to hone it down to 4 that we think are most relevant for municipalities. And that's really what you see here on the screen. If you look at the 2 blue boxes on the left, this relates to both vehicle refueling property, so EV chargers, and then fleet conversion or vehicle conversion, right? Those are eligible projects under direct pay. If you look on the right in the green box in the upper corner, there's also something called a production tax credit, whereby you can get tax credits based on the amount of clean energy you produce. But the most common one we think will be some combination of the blue boxes, but also the gray box 48, which is energy investment tax credit. So it's ITC, which is really putting solar panels on roofs. Geothermal heat pumps are another one. So this is where we think a lot of the opportunity exists. Next slide, please. Okay, credit amounts. So as I said, the most common credit we believe is the ITC, so this investment tax credit. The basis credit that you can receive for that is 6% of the project cost. That's we call it the basis credit. For vehicles, it's a little bit different of a calculation. Entities can receive up to $7,500 per each light vehicle and up to $40,000 for heavy vehicles. And I believe that is 14,000 pounds or over. Next slide, please. There are a lot of details and sort of caveats and rules around bonuses, but I do want to make mention here of 4 eligible bonuses where you can really maximize the return. So you look here on the screen. If it's a low income community, if that's the designation, depending on the project, you can get between a 10 and 20% bonus on top of that 6%. If you're an energy community, so if you have brownfield status, for example, that's an additional 10% bonus. The most common way we think to leverage these and to get a bonus is through the prevailing wage and apprenticeship adder, they call it, which is a 5 times bonus if you use prevailing wages and apprenticeship requirements. Fortunately, that is a requirement for all public projects here in the state. So by doing that, you would get the 5% bonus up to 30%. And that would apply to both ITC and PTC, so that production tax credit as well. Lastly, if you use domestic content in certain circumstances, you can get an additional 10% bonus too. So that's like using US steel on a project. And that also applies to both in ITC and PTC credits. Next slide, please. Okay, so I thought all of these acronyms and numbers and bonuses deserve, I think, a little bit of a, walking through briefly a hypothetical example. So let's say here you are a town with brownfield status. You install a microgrid with solar and energy storage, okay? We think that means what that means is you can qualify for this Section 48 energy ITC. Project cost, let's say it's $2 million. Play with me on the numbers here, right? Just for simplicity of math, $2 million. You can see just how impactful the direct pay program here is. So on a project that costs $2 million, you would be eligible to get up to 40% in this specific circumstance of that project cost back in a refund, right? So the darkest green is that basics credit. The slightly dark, lighter green is the PWA bonus, and then the energy community bonus on top there. So it effectively reduces the project cost down to 1.2 million, which is very substantial. Next slide, please. Okay, so key question to ask is, do you have 2023 projects, right? So projects which are assets you own and put into service after January 1st, 2023. Here is one type of a timeline. And the reason why I say that is the IRS does give entities the ability to choose if they want to file their return based on calendar year or by fiscal year. If you want to capture a project that was put into place in early 2023, you would need to file by calendar year. And so that is what we are recommending and have designed in this particular timeline. So that's the first step, deciding the filing year. All right. Then consulting with legal counsel, tax advisors right around now is the next arrow going forward. You should be identifying qualifying projects, gathering the necessary information for each one of those projects. And I should say we do have resources, and I know that other fellow panelists here have some information on this as well that can help guide you to get the information you need for each one of these credits. The IRS is giving all first-time filers a one-time automatic 6-month extension. So if you're filing for the 2023 calendar year, normally the deadline to file would be May 15th. But because they're giving the one-time 6-month extension, it's November 15th. What is a little bit tricky here is that the IRS wants all as filers, I should say, to pre-register with the IRS about 120 days before the filing deadline. There was some confusion on this in the past about whether that was a hard deadline or not. It's actually a recommended deadline so that they can process all the information. But to be very clear here, you have to, for whatever projects you want to count for 2023, you have to have those individually registered, or you register once as an entity, but they have to be listed in that pre-registration process. And then November 15th would be the deadline to file, and those are the forms that you need. So just taking a step back and thinking, okay, beyond 2023, just a few quick points here. I'll go quickly. We're already about halfway through 2024. So even if 2023, you don't have projects that you think are eligible, or it might be hard for you to get them all in by the deadlines that I just discussed, you should be thinking about what could possibly count for the 2024 year, and to know that the deadline for that is not going to be as far off as we might assume, right? We're already halfway through 2024, and you don't get that automatic extension next year, at least not right now. So begin to create a working group or talk to financial advisors and sort of understand those specifics going forward. The second thing is, while, all the way to 2032 does feel like a long time, we think this is now a prime time for you to be thinking about what are your capital needs over the next decade, and sort of bake into that planning how these credits can be leveraged and support your bottom line there. And then the last thing is, we know that you're going to be getting a check back from the IRS made out to your city or town, right? And there's been some question about, well, does that go into our general fund, or can we create a separate fund that we can use to create, to invest in other clean energy projects? Obviously, that's not something I can advise on, but we do advise that you start thinking about how you receive the money that you get back from the IRS, and sort of thinking about how that can be used for future clean energy. And like I said, here are a bunch of resources. The top bullet point here is a website we've created that lists a lot more resources than what you see here. I did just give you a few. I will say Lawyers for Good Government has put together a ton of resources, including annotated tax forms. They'll have a great Q&A session. You're out there also available to talk to you individually if you would like. I've found their resources to be super helpful in myself trying to understand this. And actually, the IRS does a really good job, I think, of answering a lot of good questions that people have too. So with that, I will be glad to answer any questions I can at the end, and turn it back to Allie.
Thank you so much, Bob. Next, we'll hear from Emily Brock, the director of the Government Finance Officers Association's Federal Liaison Center. Emily leads coalition and advocacy efforts of the Public Finance Network in Washington, D.C. Her advocacy includes anticipating and responding to federal legislative and regulatory activities that impact the finance functions of state and local governments and public sector entities, including tax reform, municipal securities disclosure, and public pension and benefit issues. Emily also serves as staff on GFOA's debt committee, working with committee members to develop best practices that promote sound financial practices for local, state, and provincial governments. Prior to joining GFOA, Emily was a commercial bank relationship manager at a large national bank, serving as a sole bank liaison for government and university clients. Emily, over to you. Thank you for being here.
Allie, thank you. It's my privilege. And I have the most difficult job today. Not only do I get to talk through tax slides, I get to talk through tax forms quickly. So don't hate me when this is all over. I'm here for you. And if there are any future questions beyond what I'm presenting today, the Government Finance Officers Association serves as a resource for you. So please don't hesitate to reach out. But I'd like to also say, I'm going to talk through tax forms. I know Bob mentioned Lawyers for a Good Government. Together with the Lawyers for a Good Government, we are recipients of a Bloomberg grant for a lighthouse project, of which Boston is a part of our cohort, our lighthouse cohort. And so these resources are available from us and from Lawyers for Good Government. So I wanted to make sure to highlight that. Bob presented this fairly, why elective pay, why is that important? But I also think that it's important to note that this direct pay mechanism has actually been in existence in our economy for quite some time. This is the first time it's been allowed for us to claim the credit directly. That is, state and local governments, instrumentalities of the states, territories, to be able to claim this credit. Because of that, it does resemble very similarly a to what the for-profit entities participating in green and renewable energy investments. We actually went back and they said, well, to the White House, and we said, we can't use tax credits because we don't pay taxes. So how is it that we're going to receive this cold hard cash back for the investments that we're making? And so that's why this is important, to really iron out the wrinkles and make sure that this works for us. We are starting this fresh from 2023, and so we're learning along the way. And I want to share with you a couple of things that we have learned, a couple of best practices. Now, interestingly enough, of course, I have a 25,000 member organization of all finance people. And finance folks are probably in your organization. You may be a sustainability person. You may be a person in legal. That what we found as a best practice here is that it's not just the finance person filing taxes on behalf of their organization all alone in a vacuum. It really does have to be a partnership inside of your organization between facilities and fleet and or sustainability officers, your finance officers, and your legal shop, because at the end of the day, this is tax code. So really just kind of getting outside of your office and making sure there is a team approach is certainly something that we've realized is a more helpful approach to begin with. Bob mentioned the picking of the calendar year versus the fiscal year. We're in a really important time right now, as that choice is relevant to this initial first year of investments in green and renewable energy projects that qualify. As he mentioned, you can choose your calendar year as your tax year. Now, you've never filed taxes before. So is this something that you want to do for now and for the next 10 years moving forward? Or is it something that you'd like to choose in order to capture those projects in 23 that were put into service before the beginning of your fiscal year? That's a serious question that you need to talk with your finance folks about. And in reality, we've talked with IRS, we've talked with Treasury about conforming or making sure that that calendar year can be filed, and then making sure a short year form can be filed after that, so you can pick back up to your fiscal year calendar year. Or your fiscal year tax year. So the reason that that's important, again, from the finance officer perspective, you probably have systems in place, whether it's Excel spreadsheets that aggregate information for your fiscal year. That is certainly more helpful to file your taxes on a fiscal year basis, and we appreciate that. So if you're stuck in that question, or maybe you're trying to figure out that question, call GFOA. We can talk you through the process and certainly provide some useful tips on where you can go from there. But that's the first thing you need to do if you have a project that was placed into service in 23. Now, beyond 2023, there are things that you need to do to go ahead and put in place. And Liam is going through this process right now, so I want to quickly transfer it over to him. So you've picked your calendar year or your fiscal year as your tax year. The next thing you need to do, you need to pre-register in a portal. That portal is something that has to be cleared by an eligible user, and the eligibility is determined by registering an ID.me. I'll talk about that in just a second. Once you register those projects, IRS issues a registration number. Bingo bango. Now, usually IRS and bingo bango don't go in the same sentence, because it's going to take some time for them to look at what you filed, assess the eligibility, and go ahead and issue out that registration number. Once you receive that registration number, you then can use that registration to file your Form 990T annual return. So it's an income tax filing for your entity with the appropriate attachments. And then last but not least, IRS processes the return and they issues the refund of the credit. I can tell you right now, from where I'm sitting, I'm unaware of any entity that has received the funds yet in return, simply because we're not even 45 days out of the last filing period, which would have been May 15th, would have been the first filing period. So we're watching, we're waiting, we've got our finger on the pulse to try to get a better understanding of when they will process those payments, so that we can give sort of general best practice of when that will be processed. But let's talk really quickly about registering in the portal. There are plenty of resources provided by the IRS and probably extremely helpful to you as you're thinking about entering the portal. So that IRS publication 5884 is the publication that I find to be most useful simply because it allows for entities to understand how in the world do I set up a clean energy account? Where is it that I put all this information? Help me walk through it. And then in addition, publication 5902 allows you to assign other users in your entity to input information into your portal. Now, I do want to say, when you establish your portal, when you set up your portal, congratulations, Treasury has just promoted you all to the CEO of your organization, otherwise known as the Clean Energy Officer. Feel free to put it on your business card. So you, as the CEO, then can pull in other registrants, help you to put information into the portal, and make sure that you can sort of proceed along the rest of the steps so that you receive the elective payment. So the slides that I've provided actually link to those documents. They're helpful resources and certainly something to revisit as you are walking through the pre-registration process. And the one thing I did want to mention is, again, having your finance officer in the room actually minimizes a little bit of the initial administrative burden of registering, because in the process of receiving ARPA funds many years ago, 4 years ago, finance officers in your entity may have already registered in ID.me. So you may already have an ID.me account, and that's good because that's the first step of jumping in. But as you are approaching, once you enter ID.me, you want to set up your clean energy account. And when you set up your clean energy account, there are several things that people across your organization may have, but you're going to need to pull together as you're registering. So first of all, those login credentials that are yours. What do you call your entity? What is it that what is printed on the W-2 might not necessarily be what you call yourself colloquially. So make sure that you have the IRS name associated with the IRS so that you can kind of make sure that that's accurate. You need to make sure you understand and know when all of your eligible investments have been placed into service. You need to know your EIN, your tax filing period, which you've established prior. Another thing that there may be some controls in your organization around the banking information. You need to have your routing, transit, and checking account information, because it's not the return is actually not going to come in paper form. It's going to come as an ACH. So you have to make sure that you have that information. You need to know who owns it. You need to have facilities information and census tract information. All of those things are going to come. And what we've noticed is we're looking over finance officers' shoulders when they're registering. They're like, oh, well, I've got to call my fleet folks and I've got to call my well, if you start to aggregate that information and put internal controls in place that flows the information to your CEO, that is, again, your clean energy officer, then it helps for them to be able to file more effectively and easier. Another thing, not only have you been promoted to CEO, your organization is also called something interesting inside of the portal. So once you get into the portal, a lot of folks kind of panic over one of the initial pages, one of the very first pages. They say, are you a clean energy and semiconductor manufacturer? Are you a vehicle manufacturer? Or are you a vehicle dealer and seller? And a lot of cities have gone to this page and said, Emily, I am none of these, which is true. However, the best place for Treasury to fit your pre-filing registration was under that clean energy and semiconductor manufacturer. So don't panic. Don't panic when you see this page. You can move deliberately around the portal and you can back out and you can make sure that you are in the right place. But we certainly have seen sort of a lot of confusion right on the outset as people are registering. Now, I mentioned this before, and I'm just going to do these as quickly behinds. Make sure that you have those financial internal controls in place so that you can track the information that you're going to need to register, pre-register, but also to have supporting documentation for your tax filing. We also encourage, while I've said that you build your team inside of your organization is important, you really need to make sure you have that tone at the top, a support for the pursuit of this credit now, or of this elective payment. Importantly, your tone at the top changes, your boards change, there are elections, there are changes that happen in leadership. Please note, every time you're filing a tax form, it is only for the year that you have projects placed into service. So if you have projects placed into service for the next consecutive 10 years, yes, you're going to be filing 990Ts consecutively for the next 10 years. But if you have investments in 2004, 24, or I'm showing my age, 2004, can you believe that? 24, 26, 28, you're only going to be filing those 990Ts in those years that you place your projects into service. And as Bob mentioned, there are specific dates for entities that have different fiscal years or different tax years of when your tax forms will be required. But in general, it's the 15th day of the 5th month after the end of the accounting year. Again, a misnomer, that's the way that the IRS says it, but that technically will be your tax year, not necessarily your fiscal year or your budget year. Those are two other of course, calendar of years that you are monitoring as you're establishing telling your financial narrative to all the stakeholders that are looking at it. Now, I want to say something really plain. Treasury is pretty world famous for saying, all you have to do is file a 990T. And I can appreciate that. But here's a big, scary tax document. That is the 990T. It's relatively short. It's actually 2 pages. But what's important is, in order to fill out the 990T, you have to fill out the Form 3800. So that's an important document that you also have to fill out. If you're registering for electric vehicles, you also have to fill out a Form 8938, which informs the 3800, which informs the Form 990. And then we're not done yet. You have to fill out a Schedule A for each vehicle that you purchase that then is an 8938 reconciled, that goes into a 3800, that goes into a 990T. So what I'm trying to say is, it's not just a 990T. If you need to make that explanation to all of the stakeholders in your organization about how complex this filing will be, maybe fishes will work. So if you can use metaphors and make sure everybody knows what information is required on each form, ultimately the 990T is the biggest fish. It's got to be the one that's filed, and it's the one where you make attestations. It eats up the information from the Form 3800, which eats up information from, if it's EVs, 8936, if it's charging stations, information from your 8911, and if you're doing the investment tax credit or solar panels, it's your 3468, okay? So let me say that a little bit differently. I was chatting with a friend earlier. I do fishes, but I also do cocktails. So you can describe it as cocktails. Remember, your 990T is the form that where you make the attestation and is ultimately filed, but you must also fill out the 3800, which aggregates information from your 8911, your 3468, or your 8938. Okay, so all of those things, all of these different types of tax documents are going to be a part of the process when you get to that tax filing. Again, ultimately, this is just a hierarchy of what you file, and you can say it as plainly as you'd like, but just make sure as you're approaching each one of those tax documents that you have the information available that they're going to be asking for. I'd also like to say another new adventure with the IRS. Ultimately, they say on the FAQs, they say, we are part of the Paperwork Reduction Act. Paperwork Reduction Act is a very serious act going around in Washington. They are trying to reduce and minimize paperwork that is filed into the IRS. Now, so because of that, the IRS strongly encourages e-filing. Think about it as your own TurboTax, or your, I do love the term tax slayer, so we're going to slay some taxes. But what the IRS encourages is that even you as your city, as you are becoming a first-time income tax filer for your 990T as a city, you're going to have to try to establish filing those taxes on an e-filing platform. The IRS has specific e-filing tax platforms that they've approved. This is the list. There are 18 total. This is the list that GFOA has asked. Do you have all of the tax forms available in e-filing format that we can use? This is as of today. So I'm certain there are other vendors that are ramping up their systems to make sure that they too can be an approved e-filing platform that supports your 990T, your 3800, and the 3 other tax forms. But generally, we've also looked at prices just to make sure that they are staying under de minimis thresholds, and they are roughly they do stay under the $10,000 procurement threshold so far. But we're going to stay on top of that and certainly be updating our list as we continue to talk with them. If you also are still kind of working through documents, thinking about that 990T, what are the questions? What's the information that they're going to be requiring in that? We've created some annotated tax forms. Those annotated tax forms are free and completely available to the public for each one of the tax forms that's required for elective payment. And GFOA supports, of course, if you have any questions about approaching it, what kind of information they're going to require, and certainly an opportunity to kind of talk and hold hands. One thing that GFOA cannot do is offer tax or legal advice. If you just want to know where to put the information, we're happy to point you into the cell that requires specific information. So those annotated tax forms help you walk through them and have that available to you. So I see there's a lot of questions that have come in the chat. So I've seen it sort of ramp up as I've been talking, but now I'd like to hand it back over to Allie. Happy to answer those questions after Liam's presentation.
Wonderful. Thank you so much, Emily. As Emily said, I will now pass the mic on to Liam Monahan. Liam is the Green New Deal Development Coordinator and Grant Writer for the City of Boston, and he specializes in pursuing external funding for Boston's Green New Deal goals, searching for grants, supporting applications, and coordinating efforts to take advantage of direct pay tax credits. Prior to joining the City of Boston, Liam worked as a senior policy analyst at the Boston Municipal Research Bureau, where he researched municipal finances and policy issues affecting Boston. Liam holds a Master's of Public Administration and a Bachelor's of Arts in Political Science from Northeastern University. Thank you, Liam. Take it away.
Thank you, Allie. Hi, everyone. So as Allie said, I support the grant-seeking efforts for the city. This is a somewhat unique position that was created for coordination in response to the incredible federal funding opportunities available right now for climate action, including elective pay or direct pay tax credits. I've been with the city for about 6 months now, and one of the first things I was tasked with was learning about elective pay. And still continuing to learn. As Emily mentioned, we are in the midst of getting all of our qualifying project list ready for pre-filing. Have not received tax credits yet. So I'm excited to share what I've learned so far. So on this slide, I want to take a moment to put into scale the opportunity with the tax credits with these charts from C40. The tax credits we're talking about are just one part of the Inflation Reduction Act. On the left, you'll see overall about half of IRA resources, or $207 billion, is for investment in energy supply, with other significant investments in housing and clean manufacturing. And in the pie chart on the right, you can see that the largest share of IRA funding is for tax credits, $227 billion, which is why Bob mentioned this is really a tax incentive bill. And to help put this into perspective more, you may be aware that there's a lot of grant funding for states, municipalities, and tribal governments from the IRA for clean energy and climate action. This is really small in comparison. It's the small green section on the chart, $37 billion. So just to put into scale, the tax credits are a big opportunity that we're trying to take advantage of. Next slide, please. So elective pay is one tool that we're using to advance the goals of the Green New Deal. We have certain targets, you may as well, and elective pay will help with that. For public EV charging, by 2030, the City of Boston aims to have each resident be within a 10-minute walk of a publicly accessible EV charging station. Buildings account for about 70% of greenhouse gas emissions in Boston. So Mayor Wu signed executive order eliminating the use of fossil fuels in new construction and major renovation projects in city buildings. And we're also working on fleet electrification. The city owns a passenger fleet with over 700 vehicles across all of its departments. And as the city continues to build out its EV infrastructure, it'll continue to replace gasoline-powered vehicles with EVs and hybrids. And our school department is working to electrify its fleet of about 750 school buses by 2030. Next slide, please. Next slide. Perfect, thank you. So these are the three ones that we are focused on: the alternative fuel vehicle, refueling, property credit, which is a long way of saying the credit for EV charging, the commercial clean vehicle credit, and the clean electricity investment tax credit. Next slide, please. As has been mentioned, this is really a team effort. That's one of the main things I've learned and want to emphasize. This is going to require some collaboration with various departments. I am not a tax expert, and I'm also not an expert on clean vehicles or law, so it's definitely going to require communication with your colleagues. So here are some of the ways that your colleagues may help. The Treasury and Finance Department, someone in that department may be the one to actually do the pre-filing registration and submit the tax form, so you'll want to identify them and get them involved. And they will likely have the invoices and financial records to back up everything. Your budget office might be able to help identify how projects were funded. And you should also have a conversation with them about how the credits will be accounted for when paid by the IRS. The budget office can also help plan projects with tax credits in mind for the future. You'll want to involve project-specific experts, such as fleet managers, your streets or transportation department, public works, public facilities, and energy management. They're the ones who handled the contracts for the specific projects. And there might be multiple. So for example, in Boston, we have different fleet managers for our school buses, our police vehicles, our fire vehicles, and other municipal vehicles. So, and they'll all have different lists of potentially eligible EVs. Your sustainability office can help guide this all along and take a broader approach of thinking about how elective pay will help achieve the sustainability goals of the city. You'll want to coordinate with your school district. You should note that there's one filing per EIN, so your school district may share the same EIN, so you'll want to coordinate with them to do one filing together. You'll want to talk with the law department, who might help review the regulations and can provide guidance on what you can and cannot do with the tax credits when you receive them. Your bond counsel and tax advisors should be consulted. Procurement department can help with making sure that projects are meeting prevailing wage and apprenticeship requirements and can help identify qualifying projects. And I recommend getting this conversation started early to give people time to learn about what direct pay is and to allow for questions and concerns that you might not have anticipated. It is helpful. I know my position is somewhat unique, but it is helpful to have one person coordinating all of this and gathering the information. Next slide, please. So for the first tax year with elective pay, whether that's calendar year or fiscal year 2023, I recommend a few things to get ready. Firstly, learn as much as you can in order to confidently file for tax year 2023. Give yourself some time for this because there is a decent amount to learn. It requires learning jargon about taxes, finances, and the clean energy investments, which again is why it's helpful to collaborate with your colleagues on this who may know more about these areas. Additionally, there are many resources specifically geared toward municipalities, including from GFOA, FFIO, and Lawyers for Good Government. It's a great website with links to other presentations, the annotated tax forms, and worksheets. I recommend reading the tax forms and instructions. They can be scary and overwhelming at first, but I think the text forms don't ask for a ton of information, but the key is you want to make sure that you have all the right information and are entering it correctly. And there are annotated tax forms to help with that. You want to gather the required information and organize it in a spreadsheet, making sure you have all of the required fields, especially for this first year. All the required information that might not be readily available since we're looking backwards, so you may need to do some tracking down. And using this list of eligible projects, complete the pre-filing registration by the recommended 120 days before the tax filing deadline. If you're using a calendar year basis, as we're planning to do, that is July 15th, which is just about 4 weeks away. Next slide, please. So at the same time that we are getting ready to file for tax year 2023, I'm starting to think about how we are planning for the future. The credits are supposed to be available through 2032, which is great, but capital planning is a multi-year process. So we're already starting to have conversations now about projects that might be put in service and could earn tax credits in a few years. For example, at JFK Elementary School, the city anticipates conducting geothermal test drilling during the summer of 2024. Pending the results of test wells and budget approvals, this project would be scheduled as a multi-phase project taking place across 2 or 3 summers. And this project has the potential to earn nearly $4 million in direct pay benefits. One thing to consider is, where will the tax credits go when they're paid by the IRS? The IRS anticipates making payments within 45 days of the tax return deadline. So that could be January 2025 for those filing on a calendar year basis. When the municipality receives the funds, where will you put them? Will you put them in a general fund or a special fund? Will they be used for operating expenses? I heard of one other municipality planning to use their funds for maintenance of charging stations. And or will you use the proceeds to invest in new eligible projects to get more tax credits? You also want to think about, what are your broader sustainability goals and how can the credit eligible projects help advance those goals? Also thinking about, how will the municipality fund the upfront costs of the projects? It's important to note that the credits are earned after the project is put into place, so you may need bridge financing upfront. Please note that if you use tax exempt bonds to finance your projects, that may reduce the credit by up to 15%. If you're not already, incorporate prevailing wage and apprenticeship and domestic content requirements to get those bonuses into your contracts, and develop a process to make it easy to collect the required information and maintain good records. If you plan to continue to pursue these tax credits every year for the next several years, it's good to build up some sort of apparatus, a process for gathering that information in an organized way and keeping records to back everything up. Next slide, please. So this is a list of resources that I found helpful from the IRS, the other government agencies, and other organizations. Please feel free to check them out. There's a lot to learn, but a lot of great resources to help. Thank you.
Great. Thank you so much, Liam. And thank you again to Bob and Emily. So we've had a lot of questions come in to the chat, so we'll try to get through as many of them as we can. So there were a few questions that pertain to kind of the definitions and timing. So one is, how do you define place in service? For example, if a project was essentially done in 2021, but not technically completed till 2023, how does that work? And then the other one is, can entities file a project in the following year that it started construction, perhaps if they missed the deadline? Maybe Emily or Bob, you could take those questions.
Sure. Well, I would say place into service is technically a term of art that requires discussion with legal counsel if there is kind of fidgety way, like your project is complex. But at the end of the day, what's important is that your costs that are expended in fiscal years prior to the fiscal year you have determined to be your tax year, that is the year that the investment is placed into service, reconciles those costs. Those costs still roll up to the project cost, but they may not have taken place, or they may not have been expended in the current fiscal year. One other thing I'd like to note, and because this is this is less of a term of art, it's actually an accounting term. You have to figure out whether or not you're going to recognize the revenue of the tax credit appropriately. So if you are looking at an investment and you're thinking about making it so that your elective payment is part of the recognized cost for the facility itself, you have to take into consideration GASB GAAP has not weighed in on that, but a more conservative approach might be your better bet in order to approach the cost, the total cost of the project.
Great, thank you, Emily. Bob or Liam, do you have anything to add to those questions? Okay. There were also a few questions about transferring credits to tax payers and kind of the strategy behind that. So one simply is, can municipalities transfer the ITC credit to a solar installer to reduce the total project cost? And then there's a broader question about, can someone cover the factors in choosing between direct pay versus having third-party ownership and tax equity financing? So maybe, Liam, if you want to talk more about from the city's perspective, that strategy, and then Bob and Emily, please weigh in on some of those factors and the technical details.
Sure. For 2023, the city of Boston does not have any renewable energy projects that it owns. So, right now we've been focused on 2023 as we're looking at backwards, and decisions have been made previously to do PPAs, power purchase agreements for solar projects, which the city does not own. We will be exploring that more, I think, in the future about the comparison of whether it makes more sense to own it outright, considering the elective pay incentives.
I'll just chime in. I can't answer the second question, but on the first question, I believe, unfortunately, you are not able to transfer your tax credit. In fact, the it's a little complicated, but a lot of states submitted letters to the IRS to try to have them clarify that rule to make it so that they could transfer the credits, and the final regs, as I read them, say, unfortunately, you cannot transfer them. And Emily, if I'm incorrect there, I welcome being incorrect, but unfortunately, I believe that you cannot just take the credit and hand it to a solar installer, unfortunately.
Yeah, there is a few FAQs, first of all, on elective payment, and then they were all on Liam's slide. First of all, on elective payment and also on transferability, but Bob, you're right. I think, there is an administrative burden for the city to start this whole process, and we understand that, and we can appreciate it. That's why we're having this webinar today, is because, gosh, it would be easier to ask for the auto dealer to just, credit at the point of purchase, or to have your solar installer claim the credit. And that's the way it used to work. And this is a change in that. This is a way to enable you to put internal controls and processes in place and cut out the middleman and claim this elective payment yourself. And yeah, there's a lot of, there's still questions. Again, nobody's received their elective payment just yet, so we haven't seen it yet, but we do know there is significant efforts underway at Treasury and IRS to minimize the administrative burden on your part to make sure that this is a successful program. So I would say, don't lose hope and transfer it before we even begin, please.
Great, thank you. Two questions for Bob, and if it's okay, I'll combine them. So one is, can you address how the ITC would be calculated if local grants are also secured to support the project cost? And then second, for you, does your office have any resources to help eligible entities meet the apprenticeship bonus?
So on the first question, the good news, our understanding is that you can use local resources or state resources, and any combination of those dollars. And by the way, that might also include, in some cases, philanthropic dollars. That's not going to reduce the amount of money that you can then claim credit for. However, Liam did mention if you do use tax-exempt bond dollars, there is that 15% haircut. Where this gets a little complicated is there is what is called the excess benefit rule. And all that means is that you can't basically double dip with federal dollars. So if you say you get like a grant from the federal government to cover a conversion of your vehicle fleet, and that covers, and I'm just using this as a hypothetical, 100% of your project costs, you then can't go and get the tax credit that would then bump you up over. You can't get more federal dollars than what the project is worth. You can, however, stack these. So if you were to get a grant and use, say, 30% of it to federal dollars to fund the project, you would still be eligible to get, based on what you qualify for, other credits for that. So the way to think about it is you're all good. Just keep in mind if you use tax-exempt bond dollars or factor in the federal dollars that are used there. On the second question, fortunately, we do work very closely with the Gov's advisor on labor. We would be happy to talk about anything regarding apprenticeship bonuses. I have some details on this so that I could share. Maybe it's easier offline, but if you've got over 4 people on the project and you're producing more than, I think, 1 megawatt of energy, I never thought I'd use these words, but if you're doing that, then I think you have to have 15% of the workforce with registered apprenticeships. I can double check on that, but we do work closely with our office. We do have some labor related resources that we would be happy to connect with you on.
Bob, I'd never think I would be talking megawatts either, but here we are.
Here we are.
Here we all are.
That's where we are.
But I did want to put a finer point on the use of tax-exempt bonds, which is generally what we use. In fact, that we advocate for an extension of the tax exemption every year with Congress. The use of tax-exempt bonds, the 15% haircut comes into play when you're filing for specifically the ITC. So for cars and charging stations, that's a separate calculation. But for the ITC, that's when you've got that 15% calculation come in. Yep.
Great, thank you. I think we'll squeeze in one final question for you all. So you all shared many resources that are available, but wondering if you could talk specifically about what are some ways that small municipalities or municipalities with little to no staff capacity to pursue this can benefit, and if there's any resources to help those smaller, low capacity municipalities.
Allie, do you mind if I just answer this quickly? Give a quick plug. So we have pending legislation right now that would do a variety of things related to this, including matching funds and potentially some creative financing options. But also a key component of it is we would get $12 million, including $4 million over 3 years, to provide technical assistance, and primarily to underserved communities and rural communities and small towns that are basically like, I don't have access to a grant writer, or I don't know how to file these forms. Unfortunately, the legislation hasn't passed the goal line yet. We feel good about it, but that is something that we very much hear, we take very seriously, and we really do want to be able to create essentially a technical resource hub that you would be able to come to, or we would be able to go to you and to be able to provide you with those resources and that expertise. So more to come, hopefully, on this.
Great, thank you so much. So with that, I think we'll wrap up, and thank you to everyone for joining us today. And a special thank you to our wonderful panelists, Bob, Emily, and Liam, for sharing so much valuable information. And for everyone, we'll be sharing the recording and slides, which have a whole host of links to the many resources our speakers shared. And we look forward to continuing learning about direct pay and implementing this program with you all. So I hope you enjoy the nice weather and have a great weekend.
Thanks, everybody. Go Celtics.